Good evening and welcome to tonight's webinar, member-only content, where we look at ASX investment opportunities in review for the 28th of June. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to know more about how that works, please contact me on 1300 614 002. The technology that we're using tonight is the Investor Signals member area. If you're joining us for the first time, part of your 30-day trial, just a reminder, the subscription's available for $1,320 for 12 months. If you'd like some tuition on how to navigate your way around the member area and set up the model portfolios, again, please contact me during the daytime on 1300 614 002. The graph up on screen tonight is the Nasdaq. We continue to push higher. The index is trading above the moving average. I'll take some level of caution if we see that breakdown and below that, but for the most part of this rally that started in the middle of May, we've sat above that 10-day average, and again, sort of a change of direction or portfolio positioning will be reassessed if we see a close below that average. Broadly, the S&P index has continued to make higher highs and higher lows. So we had the brief sell-off in the middle of this month, and then the uptrends resumed. The strategy here really is, unless this index broke down below, say, that 4,170 points, and if we go back to, well, just having a look at that on our local market and what it means for the XJO, the momentum still remains positive, and a break below sort of roughly 7,200 points on the index. You'll note here in our market we're a little bit softer, which might be expected, and we're sitting below that 10-day moving average. I still think it's time to narrow the number of holdings in portfolios and just try to keep exposure to slightly better quality names. There are some recovery themes that we continue to take exposure to in the market, and as I move through the top 100 stocks tonight, I'll just highlight which ones we're focused on the recovery side and which ones are just part of sort of an ongoing uptrend where we see momentum remaining fairly strong. So again, we organise these in percentage gains to the top. We organise them in buy signals, so we're looking at the best performing stocks under buy signals. I'll get a certain way through this list and they'll switch from buys to sells. I'll highlight when that shift occurs. All the stocks under buy conditions, you'll find those in the model portfolio. So if you were to have a look in here, model portfolio, drop down, change that list to ASX 100, click on the days held column, get the least number of days to the top, and that tells you that the most recent stock added to the model was BHP, and you can work your way down that list from there, and they'll be the stocks that we'll be going through. So when you go back to the watch list again, everything under buy you'll find in the model portfolio. Everything under sell is not in the model, but there are a couple of counter trend ideas in those stocks that I'll draw your attention to this evening. So Endeavour Group was spun off last week from Woolworths. The value is roughly just over $6 a share. So when you think about Woolworths trading at the moment, if we look at it around $37, it's equivalent of Woolworths normally trading at around $43.85. So at about $44, I would think that Woolworths is pretty close to some level of resistance, albeit so if we look at the div yield on Woolworths, we're tracking at sort of that lower band of sort of that 2 to 3% range, but there is the prospect of maybe capital returns to shareholders. Woolworths still, to me, is a defensive low risk area to allocate capital, and if you're wanting to drive higher cash flow returns, you can have a think about overlaying a covered call option. And if you want to run through that pricing mechanism, contact me in the office and I'm happy to walk you through a couple of examples. So Woolworths we like, there's a place for that in portfolios. Harvey Norman, following the index rebalance, has now been added to the top 100. It switched from sell conditions to buy conditions here back in November last year at around 4.30. The stock now pushing 5.30. And we've had a more recent signal here in May off this low at around $5. Wesfarmers, one of the better performing stocks. We hold this in all the model portfolios, the top 20, top 50, top 100, as well as the high conviction portfolio. Switch from sell conditions into buy conditions. They're at around 44. Continues to push higher, and we favour that stock at the moment. JB Hi-Fi, under algorithm buy signals, but not one that we've been aggressive on. It is in the model portfolios, or at least in the top 100 model portfolio, but owning it here, just some level of caution of what retail spending looks like, and we'll reassess that once we see the August numbers there for JB Hi-Fi. BHP's under buy conditions, support there off that original signal at around 45.50, and if you're looking to maintain resource exposure, BHP is still the preference. South 32 now under algorithm buy conditions off that low there around $2.70. Metcash, a new addition to the top 100 model portfolio following the index rebalance, switched from algorithm sell signals back in June 2020, and then after switching from sell, the buy signal occurred in September last year at around $2.70. Stock now pushing up towards 370, and the most recent buy signal here, if we put the crosshair over the middle of that and line it up, we can see that the buy signal occurred in the early part of May at around $3.40, and the stock now pushing up to 370. Metcash came out with better earnings than expected. Sol Patterson under algorithm buy signals, higher highs, higher lows, continues to push higher. Santos under buy conditions, still have preference for Woodside over Santos, but looking at the signal indicators here, it switched from sell into buy at around that 650 level, and we'll be watching to see whether this higher low formation at around $7 there can hold in Santos. Commonwealth Bank under buy conditions, the entry level there at around $81. It's the only one of the four majors that are in the portfolio, but complementing CBA is Macquarie, which was a recent addition to the portfolio. Aurora we like, maybe have a think about Amcor. It is under sell conditions, Amcor, but at $15.20, Amcor looks attractive. In the case of Aurora, it switched from sell conditions into buy conditions at around $2.50, continues to move higher. We'd add to that position if we saw a more material pullback. Fortescue, continue to like that within the iron ore space, so either Fortescue or BHP. Oil Search under buy conditions, but still preferences Woodside over Oil Search. Cochlear has performed extremely well after switching from sell into buy conditions here at around 190. Stock now pushing 250, so one of the better performing stocks in the model portfolio. ResMed under buy conditions continues to make higher highs, higher lows, and we've seen disruptions to product supply from one of their competitors, which is helping to feed into sales upgrades for ResMed. IGO under buy conditions, the most recent signal there off the low at around $6.90, and that's now pushing higher. WiseTech under buy conditions. Xero, we like this stock. Terrific earnings growth. From a pure valuation standpoint, if we saw a little deeper pullback, we'd certainly add to that position, but it is a holding in the model portfolios at the moment. Domino Pizza's under algorithm buy conditions. Maybe again, if you're not already in that, just be a little bit patient and wait for the next buy signal on the dip there. IDP Education under algorithm buy signals. So if we backtrack over here, it's switched from sell conditions into buy in the September 2019, and then we've had a more recent signal here in May, and the stock's pushed higher off the back of that. Cube Holdings under buy conditions, so switched from sell up the top here in May last year into buy conditions later in the year around September, October. So that buy condition signal was at around 250, and then we've continued a couple of times here just to draw your attention to the buy and the dip opportunity in this via the blog. Generally, container volumes continue to strengthen. Up roughly around 10 to 12% on the same time last year. Macquarie, we like this, and this is in our high conviction portfolio as well as the models. The recent dip from around 165 back down to just below 150 is a buying opportunity. The upside's a little more limited than what we've seen over the last 12 months, but maybe in a reasonably stable equity market, Macquarie Group could grow earnings 5 to 10% Woodside Petroleum, we like this, seeing this sort of as a buy on the dip at around that 22.50 level, and that remains our preference over Oil Search or Santos at this stage. Goodman Group, we like. We think this run's probably getting a little bit extended at the moment. We hold the SFL, which is the Real Estate Investment Trust REIT, and Goodman Group as our two preferred property plays. The expectation then for Goodman to grow earnings around 12, 13, 14%, which is extremely strong for a REIT. Again, it would be nice if we saw, if you don't already hold it, maybe just being patient, waiting for a pullback and the next algorithm buy signal. Treasuries under buy. We watched this one cross above the moving average. It traded above that from sort of around that 10.50 level up to $12. It's now pulled back below the average. From a trading standpoint, we're out of that stock, but for longer term investors, it still remains in the model portfolio. Link Administration, sub $5. We got the upcoming listing of, PEXA, the property settlement software, so keep an eye on that, and I might just flag that on the blog later this week. But Link Administration, sub $5 is something just for you to put onto your watch list. Charter Hall rallied strongly off the algorithm buy signal, but again, our preference has been SLF. Altium, following the takeover bid, we've seen that trade a lot higher, but really sort of getting back to in line with where the last algorithm buy signal was at around sort of $34, now pushing 36, so a little bit above that. Computer share, well positioned here, computer share, but maybe starting to get a little bit expensive. And again, just be a little more patient. If you don't already hold computer share, just wait for more of a pullback and the next algorithm buy signal. But we do hold this in the model portfolios. It switched from sell conditions there into buy conditions in September last year at around $12. Stock now pushing up towards 17. Cleanaway, this is one of our preferred exposures. So we've seen this switch from sell into buy conditions originally here at around $2, subsequent signal there at around $2.20, and again a more recent alert at around that $2.60 level. So if you're looking to create an entry range, if you don't already hold Cleanaway, anything sub $2.60 I think offers value. So if we were to get a couple of days of selling in the US and you're able to pick Cleanaway up at sub 260, that's one to add to your list. Aristocrat Leisure performing well after going from sell conditions into buy at around $30, now pushing up to 42. Beach Energy, just to draw your attention to the alignment now, the algorithm buy signal, the shorter term pivot point arrow pointing positive. The next catalyst would be just to wait for these moving or the stochastic to cross higher, or just wait for the share price action to get back above the average. I'll draw your attention to that on the blog. There could be a shorter term trading opportunity for those interested in it. BlueScope Steel, we like this. It's gone from sell signals into buy conditions here originally at around $16, now pushing 22, and we had the last buy signal there at around $20. Northern Star, this is one that makes its way onto the high conviction down here at around $10. This looks good value. Gold should continue to find some level of support after the recent sell-off that it's had, and that would need US interest rates to kind of run into overhead resistance, and we think that that's more likely than necessarily the Fed moving quicker than anticipated to raise rates. So we'll have to wait and see how that story plays out, but Northern Star around $10 is one that we're continuing to add to that position. REA Group under buy conditions, there's a little concern at 60 odd times earnings, so that's getting a little expensive. Incitec we like, so this is an example of where we think that maybe a new uptrend is about to get started here with Incitec, and it requires them to deliver a better second half earnings, which is what management's flagged to the market their expectation is. So if you're looking at this trade, just think about a stop loss either below that 225 or below the 220 level, but we should be at a point where we're starting to see a new uptrend emerge there. ALS under buy conditions performing well. Downer EDI under buy conditions, but again take a look at CIMIC as an alternative. Mirvac Group, our preference is SLF. Sydney Airports, maybe have a look at that on any weakness, back down to around 550. Star Entertainment under buy conditions, so again any weakness between that 350, 364 could be a buying opportunity. Obviously there's health impacts that were a little unexpected that are starting to impact the operations of both Sydney and Gold Coast. Oz Minerals we like, so again, probably BHP Fortescue over Oz, but even Oz following the correction from 27 down to $22 is a buying opportunity, as is South 32. Alumina support that around 160, but not a stock that we're too aggressive on there. GPT preference SLF. Seek we like, but it is expensive. Linus not doing anything here, but possibly developing support around that $5. Lendlease was a little bit soft today. The way we're playing this is we're buying long dated call options, so it limits the downside risk to the exposure of the call options, but it's starting to build on that position and look for a recovery there. If you want to be a bit more conservative, wait for these stochastics to point higher or the price action to get above that moving average, but around that $11 to $11.75. It looks like Lendlease offers value, although we're yet to really see a trading update that shows a turnaround in the business model or the earnings of the company at the moment. Stocklands, we continue to hold this. This has performed well since switching to algorithm buy conditions, which was off the low there at around $4, now pushing $4.75. Centre Group under buy conditions. Not surprisingly, some of these stocks are a bit weaker today, again given the increased COVID alerts. Challenger under buy conditions, but really a preference is really CBA and Macquarie. Evolution, preference is Northern Star over Evolution. A2 Milk, we've seen this recover from around $5 now, pushing up to above $6, but is a little bit softer today, and just keep an eye on whether that trades back below the moving average. Qantas Group not doing there at the moment, but it is in the model. Afterpay's in the model as well. Ansell Group. So now we've switched from stocks that are under buy conditions into companies that are under sell. Ansell we're not too active on. Fisher and Paykel, just worried that that's a bit expensive. Probably be more inclined to look to sell the rally in that a little bit. Too early to be a seller or shorter of that company at the moment. Reece bumping up towards resistance, but we're not doing there at the moment. Sonic Healthcare, high quality business, but maybe just getting a little expensive. Mineral Resources, we'll watch for the more material pullback later this year and a switch to buy conditions. Spark not doing anything there. CSL, if we see this down a little bit further, so we've had the break higher into the higher region of around 310, and we've now seen a correction. So we'll keep an eye on this as to whether we get a switch back to algorithm buy conditions, and we'd be willing to add that back into portfolios. AusNet not doing there at the moment. Reliance up near resistance. I'll just skip through a couple of these. Insurance Australia Group continue to think that that could be a recovery opportunity with maybe upside back up into that sort of more $5.50 to $6.50 range. Horizon, just keep an eye on if we see a breakout there, but clearly what you're looking at now is rather than stocks that are in uptrends, we're looking at businesses that are making lower lows, lower highs, structurally a little bit weak, and what we would be waiting for is maybe in the next 3 to 6 months is a break higher and see this shift back to algorithm buy conditions, but we're not there at the moment. Bendigo under resistance, Medibank under resistance, Telstra happy to continue holding that, Amcor on a valuation basis, you can have a think about that, so around that $15, and that's really just supported by the company upgrading their earnings outlook. APA Group, not doing too much there. Bank of Queensland, Brambles. We've really had a good part of that rally from $10 back to fair value at around $10.50. It'll be really interesting to have a look at Brambles' earnings numbers for the June period when they're released. Boral getting back up near resistance, starting to look a little expensive. Ampol not doing there at the moment. Car sales, high quality business. Keep an eye on that in the next 3 months for a shift back to buy conditions. Tabcorp up against resistance. NAB, there's a little bit of buying in the banks today following a number of the investment banks putting out reports around almost $30 billion of cash, I think is the number that across the major banks, including the regionals, where they could have that level of capital available to return to shareholders. Not that any of it's promised at this stage. Probably the most likely bank that we're likely to see return capital first is going to be CBA, and that's estimated to be maybe up to $5 billion. But the banks are starting to look a little bit expensive and some risks sitting there at the moment. Westpac we're on the short side of, as is the case with NAB. Magellan under sell conditions but has broken into a new high. James Hardie looking a little expensive up there. Origin could be a counter trend trade to keep an eye on. Worley's not doing it there. AGL still in a downtrend, but we'll watch that for a breakout. Suncorp really preference on the insurance side is IAG over Suncorp. ASX. Any sell-off from here is likely to be fairly minimal, but just highlighting that it is now under sell conditions. Ramsey under sell, but again, I think the downside risks are quite low here for Ramsey and really see it bumping sideways. Transurban under sell signals, but also there the downside risks are fairly low. Nine Entertainment up against resistance. Orica making lower lows, lower highs. Next DC, cautious on this and just highlighting that it's under algorithm sell signals there at around $12. Crown Resorts. So this is one that again I would suggest that maybe you just stop and keep a closer eye on this. Any weakness that we see as a result of the current disruptions to business could be a buying opportunity. I don't think that any disruptions that we see either over the next month or over the next 2 to 3 months really impact the takeover interest here in Crown. So keep an eye on that, and it might just be somewhere back down around that 1150 or a cross back above that moving average. You might have a think about that from a trading standpoint. Atlas not doing it there at the moment. Newcrest preference is Northern Star over Newcrest. Preference is IAG over QBE. AMP not doing it there at present. Vicinity not doing it there, and there we are back to Endeavour. So just to recap a couple of stocks outside of the top 100. So CIMIC Group, we'll just look at this from a technical standpoint. The fundamentals are definitely improving here. The company's winning a significant amount of new contracts. They have cleaned up the balance sheet. We'd expect to see the next earnings result, which I think is only a few weeks away, deliver a better picture than what we've seen in the past. So just keep an eye on whether this correction from $22 down to roughly $20 creates a higher low and we get a bit of a rally starting from there. So again, you can either buy the stock or buy the call options if you want to run through how the math works on the long call options and how it limits your risk. Again, don't hesitate to give me a call in the office. So CIMIC's one that we continue to like. Lendlease I covered. IAG we've covered. Crown I've covered that as well. On the ETF side, some of these you can either think about starting to take profit. They've performed quite well. The Asia Beta Share Technology ETF, obviously something like Alibaba's a large contributor to this. We've seen Alibaba rally 10%. Over the last week or so. JD.com and some of these other Chinese internet companies have all performed better. That was something that I've been talking about for the last probably 4 to 6 weeks, that the Chinese internet stocks are getting undervalued, and we've started to see that rally underway. So if you're looking to take profit on that, maybe a little bit early, but just highlighting that this Asia ETF has now actually switched to sell conditions, which is the first warning for us just to start having to think about at what point you want to lock in profit on some of these trades. So that could either be the Asia ETF or locking in profit. My approach to this is we've just trimmed some of it. We're staying some exposure to the long side of that whole Asian basket that we've been playing, which is the IAA, the IZZ, the Asia ETF, direct shares through Alibaba, and a couple of the other Chinese internet stocks. Cure ETF is another one, so I think this has performed well for us, and we mostly continue to hold this. So that's rallied from around that $60 up to $70 there. In the US, some of the biotech individual stocks I like. Again, the correction that we've had in Biogen's another buying opportunity. So for the moment, we're sticking with this Cure ETF. What else? The SLF, which is the property ETF that I've been talking to you about over the recent months, that remains under algorithm buy conditions, and we've just kept that in our high conviction portfolio. Uh, just to recap on the individual stocks, and hopefully you made a note of these throughout the recording. But IPL, I like the look of that. Woodside Petroleum hasn't done much despite oil prices staying above that $70 a barrel. So I'm watching that closely to see whether we find support above that low there of 21.50. So be looking for that stochastic to point higher, and then the price action to get back above that moving average. Northern Star, which I've been talking about a bit over the last few weeks and on the blog, but continue to hold that. TPG's recovered, so this is one that I mentioned again a few weeks ago, and we're sticking with that, looking to see whether it can trade up to around that $7 mark as a target there for fair value on TPG. Macquarie, I think I covered it. We need to revisit that. Cleanaway, just remember that one on any weakness in the market. Lendlease, maybe rather than buy the stock, buy the call options. Maybe instead of Star, have a think of Star Entertainment, have a think about Crown. Again, just reminding you on Amcor, I think this is a pretty defensive place to have a think about either owning the stock or doing a buy right. And that just about covers it. So I'll finish tonight as a reminder on the XJO at an index level what we're watching. And that really is that, yes, our market is below this moving average, which is a reason for a little bit of caution. We've slightly taken out the prior higher lows through here. But as a backdrop, when we think about what's happening in the US, the S&P 500 and the Nasdaq look well supported, and the first sign that we see that buying momentum falter in the US, I'll be drawing your attention to that on the blog. Thank you for listening in, and if you'd like to discuss about either the strategies I've presented tonight or the Investor Signals broking account, please contact me on 1300 614 002.